I look at it as a hurricane offshore. We're seeing all the potential paths. We just don't know where it's going to hit. Well, now we're starting to feel the winds much stronger.
What are the winds?
Well, EV sales.
What about them?
The big question is, will the customers buy? That's the big question.
What's up, everyone? This is Car Dealership Guy. You're listening to the Car Dealership Guy podcast, which is my effort to give you access to the most unbiased and transparent insights into the car market. Let's get into today's episode. Cliff Banks is an automotive analyst, journalist, and founder of the Banks Report. In this conversation, we discuss whether a Carvana bankruptcy is off the table, will used car valuations actually crash at any point, how AI will get integrated into your car, will public auto group stock prices decline from here, and how automotive media is evolving faster than ever. But before we get into the show, this episode is brought to you by Fullpath. Wasted data is a serious issue in automotive, but data is the key to driving revenues, which means some dealers out there are just ignoring a gold mine that is staring them in the face. Let's face it, most dealerships are completely overrun with data silos. None of the data sources are integrated with each other, leaving the data as a jumbled mess instead of a clean set that could be turning into cash. Fullpath solves this by gathering, cleaning, and sorting your data into one platform so you can use it to speak to your customers' needs with killer AI-powered marketing campaigns. My friends over at Fullpath are breaking barriers, and I'm really excited to have them as a partner of the podcast. I believe in their product and, more importantly, in their mission to help dealers grow. Fullpath can help you turn your data into dollars. Find them at fullpath.com.
All views of Car Dealership Guy and guests on this podcast are solely their opinions. None of the views expressed should be treated as financial advice. This podcast is for informational purposes only.
All right, Cliff Banks on the CDG podcast. Cliff, how's it going?
It is great to be here, Mr. Car Dealership Guy. This is awesome. Thanks for having me.
Thanks for joining. I'm excited about this. I don't think there's, and I don't say this lightly, but many people that have been around the block in this industry have seen as much as you have. And I'm also just excited to chat about your media background, which is, very up my alley nowadays. So,
Yes.
Before we kick that off, can you just give us your background? Tell us a little bit about, how you got to this point in your career?
Well, like you said, I've been around for a while, as you can tell from my gray hairs. My wife consistently points out to me, but it's 33 years now in the industry at some level. 23 years ago, I joined Ward's Auto and ended up over a 10-year period morphing from a journalist to editorial director. What was Ward's Auto 30 years ago? Okay, so wardsauto.com, which is still there if you get it. I mean, it's one of the oldest automotive media publishing companies in the world. It's gone through some iterations. Ward's Auto World, Ward's Dealer Business, Ward's Engine Vehicle Technology Updates were some of the print publications that they had for years. I was the editorial director of all the retail publications and events that we did. The first article I ever wrote for them was an EV-related article. Ward's Engine Vehicle Technology Update was the newsletter, and it was printed in Ward's Auto World, but it was about the Ford's Thinkmobile, which they were doing a partnership with a company out of Norway.
Ford Thinkmobile.
Yeah, so
what is that? Tell us about that.
It's a glorified golf cart, essentially, but we're going back to 2000. That was the first story I ever was published with.
So how'd you transition from there to the Banks Report, which is...
Well, they had Ward's Automotive Reports, which was a weekly newsletter. And I think as I started growing in my career at Ward's, I started seeing the influence of capital and investment, the investment community on the automotive space. I think, kind of the aha moment came when, I broke the story that Michael Dell was trying to buy the Asbury Automotive Group at the time, trying to put a deal together. And, there's a whole story involved with that. But, I really started paying attention. And obviously with Bill Gates and Eddie Lambert that were involved with AutoNation. So I started thinking along those lines and realizing that the industry didn't have anything that was focused on covering the retail space from that perspective. So I kind of had this concept of the Banks Report or something along those lines.
And what was the purpose behind the Banks Report?
Well, the Banks Report was to really, it was
like a Car Dealership Guy in like magazine format.
Yeah. Well, it was more, it was a B2B analysis newsletter, subscription based. So we charge money providing analysis. I started covering the dealer buy sell market. So I was the first one to actually start accumulating all that buy sell data. Now you're seeing everyone do it. Automotive News is doing it. You have the broker. So, Alan Haig has his report. Aaron Kerrigan has hers, which those are phenomenal reports. But, I was the first one, I think, in the industry to start compiling that data and aggregating it and starting to put some analysis behind it. Started doing the same thing on the M&A tech side. So that was the purpose of that. And I had no clue what I was doing. None. I mean, I was a media guy, and I was an editorial director, but, I knew my analysis was sound, and I thought there was would be a market for that. And there was and is, and leveraged my, long time in the industry.
You started aggregating all this like buy-sell data, pretty much all the M&A transactions, and then you package that up and you sold that as information to other dealers, I'm assuming, right?
No. Anyone that wanted to subscribe to the,
or anyone that
Banks
wants to
report.
subscribe.
So they paid a
Smart
subscription. So a lot of investment firms, OEMs, dealer principals, vendors wanted to get their hands on that data because there was no place where they could see or find, in terms of their sales teams, who is buying or selling.
Yeah, and also like price discovery. People want to know like what's going on out there. It makes total sense. By the way, it seems like it's a very similar audience to mine. I have a pretty diversified audience, but it's comprised of, dealers, vendors, consumers, investors. I would say those are like the four biggest buckets.
Right.
And that's why you'll see I'm very deliberately like to talk about, sometimes I'll talk about B2B topics. Sometimes I'll talk about consumer topics. Sometimes I'll tell you what's the best deal. Sometimes I'll talk about, what's happening in the car business. It's also like a very diversified format like that.
Yeah, you're much more diverse than even what I am or want to be, actually. I don't have that kind of bandwidth anymore.
Well, it's funny you say that because like there's a thing, right? On one hand, in order to grow your reach meaningfully, and when I say meaningfully, I mean by the hundreds of thousands, if not the millions, you have to appeal to consumers as well. You have to.
Yes, right.
But there's no doubt about it that the richer content that's also tougher to find elsewhere is what's going to appeal B2B, dealers, vendors, investors.
Right.
Because anyone, at the end of the day, like anyone could try to aggregate consumer focused content. I mean, if you Google like car buying tips, like there's a million people that have tried to do that. I don't even think that's interesting. And that's why I don't really talk about that. It just doesn't interest me. You'll see me talk about like best deals because that's super actionable and practical. But like car buying tips, all that, I say go find like the other 50,000 people on Google that do that. But I think that
you bring a different perspective to that whole conversation. And I think you've done an incredible job. I've watched you from the beginning. You've done an incredible job at growing that audience and talking to that diverse audience. I'll be honest with you. I don't know that I have that capability. I mean, I prefer to be behind the scenes a little more, which is weird because I have a conference, a podcast, to be honest. I've got this, this newsletter, but I'll tell you,
I like to be the troublemaker.
Yes. I spend more time, I think, much of my time reading SEC filings and court documents and obscure reports, trying to figure out where, what's really going on behind the scenes, So I spend a lot of that time researching.
I want to jump into something then. You mentioned SEC filings.
Yes.
Sort of breaking my flow over here, but I'm really curious to know, you put out a very thoughtful analysis on Carvana the other day. I think a lot of people, I think there's a lot of noise, EVs, Carvana, like there's so much noise. It's hard to really understand like what is going on from someone that's sober, that is not trying to bias someone, that's not talking their book, right? So what is the deal with Carvana right now? Can you give us an explanation of just like, how do they get to the point they're at today? And specifically, there's all this restructuring talk internally, right? Their stock shot up like 50% in one day. What's the deal with the company nowadays?
Well, first of all, it's run by incredibly smart people. I mean, Ernie Garcia Jr. and his son, the third. I mean, look, Ernie the elder is a long history, some of it checkered, admittedly, I think going back several years, but nevertheless, an incredibly intelligent financial whiz, one of the giants in the whole used car space. They have some smart people on their board also. They grew quickly. I'll be honest with you, I don't know that anyone knows exactly what the end game is going to be for Carvana. You can see it going any number of ways.
What are those ways?
I mean, at some point, would there be an acquisition maybe? if it made sense. It's hard.
Who could acquire them though? Who could acquire them?
Any private equity firm, any publicly,
it's like that.
either publicly traded, anyone like that could make a play. You would think it would have happened by now, but maybe there's been conversations along those lines. But again, it's an evolving story. You're dealing with people who are incredibly smart, and even the folks that they've gotten involved with, such as Paulo and the other investors, debtors, I guess, or bondholders. They know how to play this game, and it's I think we've underestimated them.
But are they playing it at the expense of like the public, the retail, or are they just great at what they do? It seems like the aisle's divided between some people.
Like anytime you're a public company, you come in with new technology, you're going to be polarizing, right? You look at Elon Musk with this. You look at any tech companies has its investors who are shorts, who are playing the short game. You have the true blue believers in the technology. I think it's a mixture. I think it's financial. Look, they're clearly very astute at financial engineering, and they're going to make it work for them. And there's going to be investors that get hurt in the process. I think, is there a bankruptcy pending at some point? It won't be for a couple of years, more likely. I don't see anything along those lines happening for a while now. They clearly bought themselves time.
Did they buy themselves time, or did they buy themselves? Are they immortal? Obviously, no company's immortal, but what actually happened here with this latest? I see your account shaking your head.
Bought themselves. Yeah, they bought themselves time. They've taken more than $1 billion. It's between $1.5 and $1 billion out of their cost structure over the last year. The question is, can they get those costs down enough to where they're selling cars profitably? And they've not shown any ability yet to do that. There's more cuts to be made. I think they have to get things aligned. But again, they're also dealing with operating within an environment that has been completely whacked, from COVID to all of the chip shortage playing havoc with new car values. So I think, it's going to take time for some of this stuff to clear up. But listen, Carvana's not going away anytime soon. They're going to be part.
What do you mean by that?
They're going to be part of the landscape. They're going to be a significant player in the independent used car space and for the foreseeable future.
So what's the bull case and what's the bear case here, right? Like in 5 years, I'm not even going too far, but just 5 years, what's the bull case?
They're not able to get their costs down to a point where they can sell cars profitably. That's the bear.
But what happens, right? Like what happens
then? You get sold, or they end up declaring bankrupt, or they go private. Yeah, I think there's, and again, it's hard.
Let me be even more. I want to go even deeper. Like, do you think there's a world where they are however you even say it, like unvertically integrate, right? Like where they start shedding off business units and suddenly they don't own their own inventory, or they don't do their own reconditioning, or they don't do their own logistics? Or do you think there's a world where that happens in order for them to right size their cost structure? Or like, do they become like a listing site?
I don't know. Again, it depends. The big question here is whether they can get their expenses aligned to the point where they can start selling cars profitably. That's the big question mark. If they can do that, it's going to be a fine company, sound company. If they can't, then, but again, they're going to have some time here because they've been able to offload some of those huge interest payments over the next 2 years. Their first debt maturity is until 2028 now. So you move that from 2025 to, I think, 2028. So like I said, they've got some time, and I'm sure they're looking at it closely. I would imagine that at some point there's an acquisition.
Wow.
But, it's,
I don't know.
I don't like making predictions on things like this because these stories evolve so quickly and over time.
I don't think that's just predictions necessarily. I think it's more so really playing out all the different probabilities and scenarios for the future.
Well, I think we can take bankruptcy off the table for the foreseeable future.
Got it.
I don't think that's I don't think that's going to be part of the.
2 months ago, that would not have been the case. Is that right?
It was certainly an open question, and it seemed like, and frankly, we had this conversation in December. In June, we had it at NEDA. I had it with a couple of people who were insiders, who knew the Carvana story intimately, and it was really the conventional wisdom among those of us that watch it closely is that it was really just it was a race against the clocks, so to speak. And then in March, it started coming out that they were looking at restructuring the debt, so it became a sound thesis that they were going to be able to do that at some point. It was beneficial to everyone. And that's what we saw happen. He created a win-win. I think the parties, the debt bondholders and the executives and board at Carvana came together and created a win-win. I think at some level, the shareholders were hurt in terms of with the stock price. Obviously, the stock price went up, but I think over time, I think it's better for the shareholders if you have a company that's still in play. And I'm seeing the stock price probably hovering in that 30 to 40 range is probably a good spot for it.
You speak with a lot of dealers. What's the sentiment around Carvana right now within the dealer community?
Yeah, listen, dealers are no fans of the company. One, it's advertising, messaging. Anytime a company comes out and starts advertising, making dealers look like crooks or incompetent, I think the reaction is pretty predictable there. But I think there's a lot of skepticism too about the model. Carvana was in a high growth position for the few years before COVID. I think once COVID hit and we got deeper into the ramifications of that black swan event, then you started seeing that Carvana's business model had a lot of question marks.
I do think they've sort of cleaned up their act with advertising, though, from at least what I've seen and what I've heard.
Sure they have. But once you go down that path, you're going to have, dealers have long memories. Right?
Yeah, you don't forget. Yeah, I do agree with that.
And, listen, I think there's things that dealers can learn from Carvana, but I'll tell you what, there were things I think Carvana, and I said this, that Carvana would learn from the franchise dealers and even this established independent used car dealers. So, look, they're part of the landscape and they're going to be there. And listen, it's an online model. It's not unlike CarMax. CarMax isn't online. Well, they are now, but Carvana's another independent used car dealer.
Yeah. Sticking to the theme of used cars right now, there's a ton that's been happening there lately. I tweeted about American Car Center. I tweeted about US Auto Sales, both, relatively large independent dealer groups with dozens of stores that have just, gone under in the span of hours or days. At least from what we know. I'm sure there's other stuff that happened behind the scenes. Of course, Sonic Echo Park, publicly traded company, they shut down a couple stores here in the Northeast.
Yeah, I think 14 total. It's 14 total. Yeah.
What's next for the used car dealer? Why is this happening right now? What's your take on this?
Well, try to keep it somewhat at a high level here, but it's just everyone's trying to adjust. Certainly interest rates have gone up significantly. I think that hurts the buy here, pay here dealers. You have significantly more competition for inventory and a declining inventory, especially in that sweet spot of that 0 to 5 or 6 year old vehicles. I think that 16.1 million in 2022 or 2021, and it's going to be, we're looking, by 2026 being down to, I think, 12. So you're looking at a 4 million unit drop in supply.
Oh, is that used cars you're referring to? Used cars,
that 0 to 5 year old category, which is the prime, category for used cars, right? So,
and what that number you provided, what is that? Is that on dealer lots? What are these cars?
Yeah. That will be the available inventory that's out there.
Got it.
That everyone's going to be
in
fighting
that category.
over. Yeah. So that's why.
So you're saying that segment, the 5 to 6 year old, is going to keep declining.
Yes.
Roughly by another 20+% over the next couple of years.
Yeah. And that's going to be, in that data, I think both S&P Global and Wards and JD Power and Cox all have similar data to that. So, what that means, I think we're not going to see a crash of used car valuations in that category. You're going to see some fluctuating, in terms of the levels, wholesale levels, but I don't think there's going to be any massive decline there. Part of that's going to be determined by what happens, with with new cars. I frankly think we'll start seeing more incentives coming
on
soon
the new car side.
On new car side, and depending on the brand, Toyota is still pretty lean, but everyone else seems to be getting pretty fat, and it cracks me up because, a couple of years ago, everyone was talking about product discipline, production discipline, and we're not going back to the incentive era. We're going to keep a lid on our production. Those of us who have been around a while laughed at those comments.
Why do you laugh at that?
Well, you can't give up that market share. You can't. So I don't care how much profit you're making. And you got to keep listen, you have the thing with the UAW, you got to keep your plants running. They have to be running at a certain level to maintain profitability, and you're talking 88, 90% probably capacity. you have investors, Wall Street that hammers you if you start losing share. And all it takes is one to go down that route, and then everyone else is going to start to follow. And I think the Koreans are incredibly opportunistic in their mindset in finding ways they can create or gain market share. So they're definitely going to play that game.
So you're pretty much in the camp of we're going to see more incentives. New car prices will come down.
Yes. Yeah.
Wow.
Yeah. Well, we've seen on the EV side already, right?
Yeah. Tell us about that.
Yeah. Yeah. I mean, Ford just knocked $10,000 off the Lightning. Tesla's been playing that game. Obviously, he's applying pressure. Tesla is applying pressure to the other manufacturers on the EV side. But what we're going to see, I think, is it's going to be brand by brand. I think incentives are going to be more market-based, focused, targeted, as opposed to national. We're going to see an ebb and flow. And I think we're going to see a world in which cutting and raising prices on vehicles is going to be a part of the landscape now.
So if we're going to see more incentives, which I think makes sense, I'm not in the camp of like, hey, we're not going to see more incentives because the OEMs, car manufacturers have learned that they should keep supply low and profits remain high. I just don't think, again, a free market doesn't work that way. I don't see it. To your point, like someone is going to, they're going to jump the gun and start, lowering prices or whatever. And then everyone has to follow. It's just how a free market works. But how is that going to impact then the used car side, right? Like obviously new cars compete with used cars to a certain extent. And so what do you think the outlook looks like for the used car business? Because you mentioned that valuations likely won't crash because there's such a shortage, but will this then actually reduce demand for the used cars?
Yeah, sure. But again, I think when you're looking at the number, the inventory levels, getting to the level of what we're talking about, 12 million or so, there's still going to be a healthy demand. I will say this, we are entering a period, and I wrote in 2018 a column talking about the uncertainty that the auto industry was going to encounter over the next several years. And
why? What did you see back then?
Well, just, and I think it's an uncertainty that we've never seen before in the space. And it was being brought on by things such as the connected vehicle. And I'm not talking necessarily self-driving or autonomous. I'm talking about software-defined vehicles as the term is now becoming in electric vehicles. And we're starting to see the big prognostications. Now, this was before COVID when I wrote this, but now we are right. I think I look at it as a hurricane. Yeah, we're seeing a hurricane offshore. We're seeing all the potential paths that the hurricane can take. We just don't know where it's going to hit. So we're staying here in South Florida and we're watching. No one knows exactly where it's going to hit. Well, now we're starting to feel the winds much stronger.
What are the winds?
Well, EV sales.
What about them?
The big question is, will the customers buy? Are the customers going to get on board? That's the big question.
You're saying like without like government incentives and whatnot?
Well, even with government incentives, even with the IRA, the Inflation Reduction Act, I think that and I don't think anyone has an answer yet or knows fully how it's going to play out. I mean, there's some scary possibilities here.
Like what?
Well, when I say scary, all right, so let's look at different scenarios. Let's say EV sales take off. Let's say GM is incredibly successful with its launch of the Equinox, which is going to happen. I mean, they just now this week started rolling out the EV Trailblazer off the line and going into dealership lots. Let's say Ford figures out some of their challenges, Volkswagen, I mean, some of these players. And let's say EV sales become the dominant vehicle of choice for the market over the next 5 years. All right. Wow. What does that do across the board? It's going to have a significant impact on dealers, on the retail market. Now, we can get into that later. I don't think the dealers are going away by any stretch of the imagination. But I think there is going to impact that market significantly. I think the whole...
How will it impact the market though?
You're going to, I think you could see, we know there's going to be an impact on service operations. Now, do I think it's going to happen in 5 years? No, I don't, because you have right now 283, almost 300 vehicles, used vehicles that aren't EV that are on the road today. There's enough market out there on the service side for dealers to capture if they got serious. But again, it's going to impact. Here's what I think some of the impact is going to be. First of all, EVs, I think it could change some of the way we own our concepts of ownership. There's a lot of, you've written about this and you've talked a lot about the vehicle subscription. You had Scott Painter on a while ago. I love the concept. I'm skeptical of it because we had a first round of it at one point, a few years ago that failed, flamed out miserably, including one of Scott's earlier companies, Fair. AutoNation just now launched its micro leasing AutoNation Mobility in 2 states last week. But when you have an EV, it's really going to become a question of evaluations. And I'm trying to paint the picture here. If EVs become the dominant vehicle, it's going to upend everything we know about vehicle valuations. That whole world's going to be upended. I know banks and lenders are looking very hard at it, trying to figure out how that happens, what that's going to look like a few years out.
But is that really an issue? Like, isn't that already the case? I mean, we're already selling, tons of EVs.
No, we're not. We're wet. I mean, you have the Teslas out there. There's not a ton of others. It's Tesla and, everyone else combined right now. We don't have enough yet to determine to see. We're still so very early on this whole EV dynamic, number one. Number two, there's a lot going on the battery side in terms of development. It could make all the batteries that are on the road today obsolete. That's a big question mark. I think you could see a world in which the battery that, it's separate to the valuation of the battery is separate from the actual vehicle. I don't know. I mean, there's a lot of different scenarios being kicked around, but I do think that's going to upend. I think
that's an interesting one. I haven't heard that one before.
Yeah. I mean, the battery is going to become the battery health, and we don't have enough data on that. And I think it's going to be manufacturer by manufacturer. And then let's say the EVs don't play out. Let's say it becomes, it's where it is today and no more. Well, these OEMs that have made huge investments are going to eat a lot of those costs, and it's going to be painful for a little bit. I mean, and they'll manage because I mean,
one could say they're already eating tons of costs, like on the Ford side.
Well, they are right now. But let's say that none of this pans out. Let's say that all that money that they've invested goes to waste because the customer doesn't want to buy. What happens to their value, in terms of Wall Street
I would say, other than EVs, I mean, you mentioned these hurricanes. Like, do you think what else is on the horizon from what you're seeing? Like, what other big things are out there?
Well, you have the software-defined vehicle, which if manufacturers are able to get their data structures in place, and when I say that, most of the manufacturers are, their data structures are incredibly siloed, and it's just very hard to merge all that together. But hey, let's take a connected vehicle, and I've talked about this at conferences numerous times, but, down the road, you could have, let's say the connected vehicle is, all of the systems are able to talk to each other, and that data is able to be aggregated into a cloud-based connected vehicle platform. So take Ford, for example, they could be grabbing data from all of the vehicles that they have on the road, from all the various systems, the braking systems, the engine systems, whatever, telemat, whatever. And it's being fed into a platform, a data platform. So they have all that data. They'll have all the customer data. They'll have all the vehicle data. And what could they do with that? And what does that do? At the dealership level today, the dealers have that data, control that data. Well, at some point, I see the manufacturers controlling that data because they'll have access and have data that they've never had before. How does that change the game a little bit? I think, if a Pollyannish view would be, manufacturer has figured out a way to take that data. The vehicle is able to talk to the customer. Let's say I'm in my Ford F-150 and it says, I get in one day and it says, Cliff, verbally, it's using, whatever the AI, large language model, whatever it is. And it says, Cliff, we're going to need new front brakes in about a month and a half. ABC Motors has a slot open on Wednesday at 5:30. Would you like to set an appointment? By the way, it knows that I prefer a loaner vehicle. So it'll have the loaner vehicle and the type of loaner vehicle that I want. They're waiting for me. Or depending on the pay, you could sell any kind of VIP platinum package and, The dealer comes out and gets the vehicle for me and drops it back off, or comes out to my office and fixes it. There's all kinds of scenarios there. But the point is, if that connected vehicle platform is able to tie it all together, the retailers, the vehicle, the manufacturer, the supplier, the shipper, all of that, and it's able to leverage AI and predictive models to tell me that it knows when my brakes are going to go or when I'm going to need new brakes. That's a wow customer experience. That's incredible. That's what I would.
So who captures the value there? Like, is there a world for
Well,
startups?
I don't know. That's how does that pencil?
Exactly. Do the OEMs, the car manufacturers capture the value, or can startups, build these types of things and, they get acquired or they build into it?
Well, look, we're seeing it. We've seen a startup, Techion, which is a DMS startup out of California. They're making a play to be the one that ties all of this together especially on the dealership side. CDK has, a platform that they've been building and touting. I think the manufacturer stands to gain the most here.
Really?
But again, it has to, because they'll have the data and they'll be able to communicate with the customers in a way that no one is able to communicate, and it's through the vehicle. Now, look, we're seeing elements of this already, but I'm talking now whole perspective that I just painted. I think that's still a ways out, because you have to. There's a lot that has to be done, but we're getting there in steps. But what does that world look like ultimately? I don't know. But that does change the whole tech landscape, I think, at the dealership level. It changes how dealerships will communicate with their customers. It's going to require a much more collaborative approach between dealers and manufacturers. And again, I don't know that we get there because of the 100 years of history of dealer manufacturer relationships that are, that are been fraught with distrust and, I think well-earned animosity, even from both sides. So
I feel like there's an opportunity here. I just had someone on the pod recently, a guy named John Hayes. He's building a company called Ghost Autonomy, and they're sort of looking to create this almost like self-driving that can be equipped to any manufacturer,
right?
Or licensed to any manufacturer. So it makes me think that like there's an opportunity. Like every manufacturer is going to try to do what you're saying for their own vehicle, for their own line. But it makes me think that is there an opportunity to build this like one universal platform that you can hook on to any car and get that level of personalization and integration? I know that, I also had Fullpath CEO Aaron on the pod.
Yes.
And he spoke about, AI and working on do that for the sales process. But this seems like this falls more in the ownership side of things.
Yeah. I think it changes the whole ownership. And listen, maybe at some point you have these, the Scott Painters of the world, which end up being correct in a few years, that the whole idea of ownership changes and becomes less of a, my vehicle versus, short-term lease or a,
how
shared.
realistic do you think that is? Do you think
I don't think it's real. No, I don't think it's viable at all, because
why?
The psyche of the American consumer.
The psyche of the American. That sounds
the American consumer. Well, think about this. You got a car in your garage, right?
Yeah.
And you're in my stage in life. I don't have car seats anymore, but do I want to keep changing car seats out? I love these analysts that would, and futurists that would talk about the vehicle being used only 4 or 5% of the time and being parked the rest of the time.
Why do you love that?
My argument is, that vehicle's in my garage, that vehicle's in use, even if the wheels aren't moving. It's got my golf clubs, lawn chairs in the back. It's got the car seat. It's holding my trash that I was too lazy to take out of, the vehicle last night. It's in use. Now, if I'm having to share a vehicle, and rely on autonomous coming to pick me up all the time, and I'm giving up ownership, we don't have that. The American
it seems
consumer,
like it seems like it's a convenience and luxury thing. And the reason I even use that word luxury for car ownership is because I spoke about the average payment on a new car nowadays is close to $750. And, add insurance on top of that, you're over $1,000 a month. Is that sustainable though? Right? Like, are people going to have everything you're saying is definitely ideal. Like, I love that as well, right? Car seats are in the car. I'm not going to, it takes me 20 minutes to install those damn car seats, but, and I can't imagine, moving them and let alone getting some other car seat that some other, kid used that's probably dirty. My wife is not going to want to put a baby in that. So I can only imagine these like 5-10 steps. But with that said, is that going to turn into a luxury? Like, will people have no choice where it's just like, hey, new cars are just so unaffordable. Like,
Yeah.
I have to
Yeah.
subscribe and it's the more affordable option. And then boom, 30% of the population is subscribing.
Right. Look, I'll go back to when I was living in Philadelphia in the late 80s, and I was a late teenager, late 80s, early 90s, and or through 1990, and I didn't own a car. I took public transportation. I jumped on SEPTA, I jumped on the subway, the Broad Street line every night. Took the 26 bus down Rising Sun Avenue. So I was, I was living that life in 1987, 88, 89, 90. So I didn't need a car. Once, and I was 20, I think just turned 20 when I bought my first car. Listen, but I think historically, 5 years ago, we'll go back 5 years and cars were what, 35. But if you went back 20, 30 years, it would have been unfathomable that we would have been paying $35,000, $40,000 for a new car, right? So society has a way of adjusting to costs.
Well, wages have risen as well.
Yeah.
Not necessarily at the same pace, but yeah.
Correct. But I think that we would likely see a similar dynamic. People are going to hold on to their old cars. We're seeing that. I mean, the used car age is, significantly older than what it was even 10 years ago. So we're seeing it. Like, I've got it, in my driveway right now. I got a 2007 Ford Fusion with 212,000 miles on it. It's one of our vehicles. We've got, we have a few, but that's one of our vehicles. And it's become a running joke with me now that I'm going to try and keep that going as long as I can. So I'm putting money into it just as see how far I can keep that going. But,
Wow.
should I go, I could make the case.
That's already pretty impressive.
Yeah. So, I think we may see more of that, but we were still, up until the pandemic, we were selling about 55 million vehicles a year at the dealership level, both franchise and independent used car. That's new and used cars. 55, that was the typical year. I think we'll get back to that at some point.
What are we at now?
Boy, what are we going to hit? 15 million this year? I'm getting old, so my memory's off. I think we're on pace to hit 15 million new car sales
New
this
only.
year.
Yeah.
New only. And I think I wrote on one of your Twitter threads, I think I wrote that we'll get 16 million in 24 and, maybe 17 million back by 25. I don't know. I mean, I was being somewhat tongue in cheek there, but I think it's entirely possible.
And what about used? What are we on track for used right now?
Boy, I haven't looked at the numbers lately, but given, like I said, in a given year, you're looking at 15, 16, I think maybe 14 to 15 on the new car franchise side in terms of being sold out of new car dealerships, the rest being sold out of independent used car dealerships. So that's a lot of vehicles. And there's still there's still a lot of pent-up demand. And we're not seeing that demand dissipate right now on the new car side. I mean, you had Jonathan Smoke on a few weeks ago from Cox, the Cox economist. I don't know. I think, I'll tell you, some of it is colored by, when we came out of the recession in 2009, 2010, 2011, and we thought it was going to take forever to get back to that 16 million unit level. And in no time, we were hitting 17 million new car sales. So we were, granted, different dynamics today, but am I more Pollyannish or rosy in my forecast? Yeah, maybe. But some of that is because we've seen a lot of this before. None of this is new. Maybe the increased, the explosion in new car prices. But I would say some of that is based on, it's out of whack because the electric vehicles are so high. And we've had so many of these new car vehicles, priced above MSRP because there hasn't been the supply. Supply is going to come back to a rather normal level, and then we're already seeing these prices come down. So I think some of that's going to write itself out.
You mentioned supply. Publicly traded auto groups are near all-time highs, their stocks.
Yeah.
What do you think happens here next with these groups?
Well, I can tell you over the last 10 years, it's been in ebb and flow, up and down. Okay. However, the ups always end up being greater than the downs, which is why we are seeing consistently them hitting their highest prices. The share prices are hitting their highest levels for the most part. I mean, does that trend continue? Certainly appears that. I mean, net income is coming down. I think what we've seen in the most recent earnings around for second quarter, the net income has decreased across the board, but
Correct.
Revenues are up. I think sales are up. They've hit record quarters, and they keep seeing records on that level. So, even with net income coming down, it's still way above pre-pandemic levels. So, can they maintain that? Probably not. But stock price is only one metric to look at. I mean, you have to look at the total return.
What do you look at when you look through these SEC reports? What do you really focus on?
What the trend levels are. And I try to not look at it so much from quarter to quarter, but more year over year. You look for any massive red flags. And it's interesting. You mentioned Sonic with the Echo Park. There were some red flags going back over a year, just in terms of the profitability and the fact that the Echo Park stores weren't exactly profitable. And you're wondering how much longer could that go on. And
weren't the Echo Park stores at Sonic, weren't they doing like front end it's like the profit on the car was like $500 or something like that, $300?
Yeah,
something
it was pretty small. Yeah. And I don't think they were, I mean, I looked at it prior to the second, we're going back 3 or 4 weeks, and I wish I'd written it down, or had it in front of me actually. But you just go back to the car. I just remember thinking, as I listened to those earnings calls each quarter, look, they're going to have to do something with Echo Park. And I think Sonic's done a great job, but boy, I'll tell you it's funny tracking these companies, and you just see some of the differences in mindset and strategy. AutoNation has reduced its number of shares by almost 100%. I mean, they've been very aggressive at buying back shares. Lithia, on the other hand, has been very aggressive on the acquisition side. So completely two different strategies. Both, are trying to do different things, go outside the typical franchise dealer model and start adding things. AutoNation bought Repair Pal, they bought the bank, they launched AutoNation Superstores, which again is a resurrection of what they were doing prior to the late 90s when Mike Jackson was named CEO. And they were a group of used car superstores, and he immediately got rid of those. Well, now they come back and restarted that. We'll see how long that stays in play. Certainly, if you're looking at Echo Park, you're thinking, maybe this massive used car play that these dealers try occasionally they just don't end up not penciling, because they've never seemed to be sustainable. We've seen this time and time again. So, and then you take a Group 1, which is fascinating to me because they are solely focused on selling and servicing vehicles in their local market areas. They are not at all interested in shipping vehicles across the country nationally or to different markets.
That's why they're super profitable.
Exactly. It's a phenomenal, and it's just the nuts and bolts. It's just the basic, boring business model. But you look at their profitability, you look at them as a company, and it's hard to argue with, right? And then obviously Lithia's had the stock price that's been, as high as 400 at one point. Now it's back down to earth. Group 1, ironically, passed it earlier this year for maybe a week or two.
Yeah.
And Lithia regained the crown. But that was the first time in years that someone other than Lithia held that crown. I'm bullish. I'm bullish on, I think they all bring something to the table.
So before we wrap up, I want to ask you, I want to talk about a bit of a different topic.
Sure.
Which is just automotive media.
Yes.
How do you think automotive media is going to continue evolving? It just seems like And I'll save my opinions first. I want to hear from you.
Yeah, yeah.
But it seems like, we're sort of ushering in this new generation of automotive leaders, whether it be new management, Gen Z, getting into the industry, whatever it may be. It just seems like media is being consumed differently. I'm really curious to hear from you, though. Automotive media, you've been in for decades. How do you think it's going to change and evolve over the next 5 to 10 years?
Well, I've lived through some of those changes, some of them painful, some of them that's a great question. That is a great question. Look, I don't live in the world of the consumer media. So I don't really
put the consumer aside. Don't even worry about that.
So automotive is fascinating. When you look at the landscape of media properties, these are big ones, automotive news. Wards has a different audience somewhat, but they still are competitive with automotive news. It's a different model today. Then we have all of these. You got all the dealer publications that are still out there. Auto remarketing, dealer success, dealer marketing, auto dealer today. It's hard to, and much of that is focused on best practices, helping dealers manage their businesses and managers and executives manage their businesses. So you have that whole element. And, and I don't play at all in that world. I don't have the knowledge to talk about best practices in the dealership world. I leave that to people that are in the dealership and the vendors who are helping dealers with, manage those. So I tend to be more analysis driven, more big picture focused, and even under the radar focused. So I think, look, I have a conference. I think that's part of the whole media set. You have, numerous conferences out there, and every once in a while someone will complain about the number of conferences. And my response is, look, as many as the market can bear. If you don't want to go to you don't go to a conference. Don't, why complain about it? Just don't go. I mean, as long as the sponsors are willing to step up and help foot that bill, and people are willing to buy that plane ticket and show up, and I think everyone's trying to find where that sweet spot is. I think I've carved a niche, and which works. And
we may see a car dealership guy conference in 2024.
Yeah, I'm sure we will. I'd be shocked if we didn't.
If you're listening to the pod and you have conference experience, you know who to contact. I'm waiting for your DM.
Yeah, but we have ours in December in Scottsdale, and it's not, shameless plug here, I guess, but we're just,
go for it.
We're very, I'm not intent on growing those numbers exponentially. We're at 200. This will be our 7th year, and it's been 150 that, we hit our record attendance last year and probably hit that 250 to 300 mark this year, but I don't want it. It's a very exclusive, we spend a lot of money on that event, a lot of money. So it's it's a little bit different than some of the other events in terms of what the focus is. It's not best practice focus. It's more investor and investment focused, I think. But in terms of where media is going, we had this conversation with our people recently. We're talking about social media channels, and I have no interest whatsoever in TikTok, Instagram. I found out I had an Instagram account. I have no idea how I have an Instagram account. I'd never set it up. Someone told me it was through Facebook. That's how ignorant I am of that. I'm on LinkedIn and Twitter. I have a Facebook account, but I haven't done much. I use it just for intel, essentially. But I know there's a huge number of.
You're the all steak and no sizzle.
but right. Yeah, I've been accused of having very little sizzle. So
no, I'm saying that like jokingly because you just keep it real.
Yeah. I try. Well, look, I got to differentiate myself somewhere. I can't keep up with guys like you. Honestly, I can't. Hey, you come into this and have grown exponentially. You've exploded onto the scene, and your content is sound. Your content is, you have a knack for generating responses and getting people engaged. And that is phenomenal. I mean, it's been fun to watch.
Yeah, look, I think a couple things. Number one, it took about a year of daily tweeting before I started growing. Well, anyway, it took me a year before. It was around December, January of 20. What are we now? 23 years? Yeah, it was around the end of 22 when I would say it's really started rising. But what people don't know is it's nonstop. Like it's it's a type of thing where, I'm in the bathroom, I'm eating, I'm on my phone. It's so accessible, but you're always trying to fill in those like dead 5 minutes because it's a full-time job. It
Yes.
just takes a lot of work. Now that said, I'm definitely a student of the media space, meaning I love to just, try new things, new formats, new writing styles, and just to see how people react. I try to keep things super, super balanced. It's really tough though, because you're always upsetting someone. You say one thing, the consumers get upset at you. Oh, you this. You say one thing, the dealers are upset at you. I'm not perfect either. People don't realize, it's sometimes you're tweeting. I don't think I've scheduled a tweet in a while. Like I don't even remember the last time I scheduled a tweet. I do have drafts. Like I will have a draft and I'll just like, go in and post it. But pre-scheduling, I stopped doing that a couple months ago just because I enjoy more like raw, organic, kind of, hey,
Yeah.
like what's
Right.
interesting to me right now. So yeah, it's definitely, it's very, very intense. I think that's also a big part of what separates, you know, the the accounts that grow from those that don't. But also, you have to keep a well diversified, a well diversified content, and to try to bring stuff that's actually interesting to people. And it's hard, you're constantly looking for interesting things, and you don't always have them. That's why you see some days I go and I don't tweet, or maybe I tweet once. Other days I'll tweet 5 times. But it's definitely fun and fulfilling. The podcast has taken it to a new level, and I really enjoy this. To kind of sum all that up, I just think that it's a constant evolution of transparency. I think the level of transparency we're at now is, first we had transparency of like, websites, said prices, then TrueCar came. And
Right.
I just feel like now we're at a level of transparency where it's sharing the ins and outs of the industry. And frankly, you see the dealers that embrace it are doing well, especially the ones that follow me that are, engaging with the audience that, maybe I'll speak about something, interest rates, prices, monthly payment, whatever, inventory. And a dealer will come in and chime in and say, oh, by the way, we just sold this or that, or they'll just share an anecdote from their experience. And then people in the comments like, oh, hey, by the way, I'm looking for this type of car. Can I
Right.
contact you? So you see real business happening
Yes. Yes.
in the comments, which is pretty remarkable. So I just think that we're, I think things are going to continue getting more transparent, but I think it's going to benefit everyone because it's not, yeah, I just I don't view it as a harmful transparency, meaning it's not about like, I gotchas or, putting consumers down, putting dealers down. It's about just, hey, let's keep it real. This is what the landscape looks like. This is how the business works. This is the reality of the current automotive landscape. And now you have the information, go make your choices, go make your own decisions.
Right. Well, I think something like you, I mean, what you've done too has been that you've been able to shine a light and provide, you use that word transparency. What I've noticed for you on how the business actually works and what's going on at the dealership level and what drives, some of what, some of the behavior at the dealership level too. And I think that's great for the consumer, to be able to see, and understand, have a better understanding there. I'll tell you, I lived through 2000s awards, and we were gatekeepers, Automotive News awards, and then there were a couple of other magazines that came out, but we were, gatekeepers of the information. And that's been completely obliterated, in terms of, I think now social media is completely democratized. And I think that's been great. I think, but it's also been rough and challenging too, because there's a lot of people that don't really understand what they're out there talking about or saying. It's funny. I'm on Seeking Alpha quite a bit, and it's just amazing some of the things that I see there that are,
I think you bring up a good point about gatekeeping because I feel like at this point, I can do in a day, it really depends on the day, but I can do like 3 million views per day impressions right now. And I think about that. I'm like, it's incredible that this is all, free, right? Like I built the audience is mine.
yeah,
Or, to a certain extent, it's the platforms, of course, but, I'm renting it for free. And the idea that you're right, like there's no gatekeeping with social media if you're able to build a proper audience. I think the other thing to note is just that the responsibility that comes with that. And
yes,
I've definitely, as time has gone by, you think more and more like how everything you say actually impacts people. And you realize like I have people following up with me after months, like, hey, I just bought a Buick because of your tweet. And like I start laughing because, I'm sitting with like a crying baby on one arm drinking a soda on the other arm. And I'm like, oh, by the way, let me talk about, Buick. This is interesting. And, months later, I have people telling me that their family just got a great deal on a Buick because of my tweet. And it's just so crazy, the impact of social media nowadays.
You've evolved too. You've grown significantly from when you first started. I think in terms of being responsive, and I say this with just admiration and as a compliment. I mean, you have really, I think, from where you were when you started to where you are today, in terms of understanding that responsibility of being, someone that's a voice in the industry and trying to make sure you get it right and understand things that you don't understand. I mean, you're trying, you ask great questions and, you, like I said, I mean, the level of engagement you get is, I think if I was a your age now, and I'm significantly older, I mean, you would be a model I would follow on that. I think in terms of building out a media property.
Yeah,
so.
and it's a constant learning process. And like you said, 100%. I was, more rough around the edges. I've definitely cleaned up the edge.
I think the guests that you have on, so it's just it shows that you are a student of the industry, and I think today people are true students of the industry, and are willing to be to understand that the responsibility that they have if they become a voice. I think and there's not many. I mean, I think there's too many that are willing to be a voice without being a true student there, and I think those of us that are students end up probably wielding the most influence over time. So, and I like to say, I'm just a guy that's been around a long time and has seen a lot and, had a little bit of a knack for writing.
And you keep it humble.
I understand my role.
Yeah.
I know where I'm at. So.
Well, Cliff, this has been super fun, very insightful. If someone wants to learn more about you, Bank Support, where can they?
Yeah, thebanksupport.com, autovate.org are the websites. You follow me on LinkedIn and on Twitter.
Love it.
And those are the Twitter and LinkedIn, only two social media places for me. But we've got a newsletter and a podcast now, which I've launched somewhat begrudgingly over the last couple months. So I'm learning. I have a certain idea of how I want the podcast to be. So we'll see. It's I'm content to learn.
We're all figuring this out as we go.
We are.
I started this after a phone call with a buddy just for fun. Used GarageBand, and I was talking about some consumer topics, and then I got to a point I said, I need more content, and then I started bringing on guests, and it just got interesting, and here we are today. So it's just a constant evolution, and so we'll see we'll see what happens in 1, 2, 3 years.
Well, keep it up. This has been fun to watch.
Appreciate it, Cliff. Well, Cliff, thanks for coming on. This has been awesome. And we'll talk soon.
Great. Thanks.
All right. Hope you enjoyed that episode. Please give the podcast a rating, consider subscribing to the show, and check the show notes for links to what we talked about. Thanks for tuning in. I'll see you guys next time.